Hi everyone! If you haven't watched part 1 to this video, please go back and watch. Let's get started. Part 2, Financial Information. Financial Info section of a 10K report. Management Discussion and Analysis. The most important aspect of the Financial Information section is the MD&A. This section provides an executive overview of financial results for the previous year. In learning how to read a 10K, the MD&A will explain the most notable financial metrics that investors should take into account. Common metrics include customer growth, revenue and revenue growth, total cost and expenses, net income, capital expenditures, cash flow, number of employees. The MD&A explains how the financial metrics tie into the company's story, connecting quantitative and qualitative information. The MD&A is an excellent tool for beginning investors who have less experience with financial analysis but want to better understand how to read a 10K. Look for positive and negative material changes such as declining gross margins, weakening cash flow, or increases in long-term debt that may need to be examined further. Studying the financial profile. One reason it's so important to know how to read a 10K is that it's the primary source for locating the info necessary to calculate all relevant financial statistics and ratios. The 3 main financial statements included in a 10K are the income statement, balance sheet, and cash flow statement. The income statement or the profits and loss statement, P&L, show revenue, expenses, and net profits over a full year. The balance sheet includes assets, liabilities, and shareholders' equity at a point in time. Shareholders' equity measures the amount by which a company's assets exceed its liabilities at a moment in time. The cash flow statement shows the cash generated or used by operating, investment, and financing activities. This statement summarizes changes in the company's cash position. When evaluated together, these 3 statements provide a picture of a company's financial health. One main benefit of knowing how to read a 10K. When studying the financial profile, begin by studying the following. Growth profile. High-growth companies tend to lead to higher valuations. Determine whether the growth is acquisition-driven or organic. Compare the growth rates year over year to see if there are any signs of growth slowing down. Cash flow. Cash can be the most revealing financial metric. The cash flow statement shows whether the company is a user of cash or generates cash. A company can report positive net profit but negative cash flow, which could be a red flag. Companies with stable or increasing cash flow are more likely to be a healthier company. Profitability. Profitability measures the ability of a company to convert sales into profit. Profitability ratios employ a measure of profit in the numerator and sales in the denominator. Gross profit margins and operating margins are key indicators of operational efficiency and pricing power compared to competitors. Size. Size can be measured in terms of market value, i.e., equity value, enterprise value, or market cap, as well as key financial statistics. Size is likely to have an effect on dynamics including economics of scale, purchasing power, pricing leverage, customers, growth prospects, and trading liquidity of shares in the stock market. Credit profile. As a creditor, creditworthiness demonstrates the capacity to meet debt commitments in full and on time. Credit profiles say a lot about a company's financial policy, risk profile, and growth potential. The higher a company's debt, the more likely it is to face financial difficulties. The following are some main ratios that can be used to compare industry standards. Total liabilities divided by total equity equals debt-equity ratio. The percentage of a company's activities that are funded by debt rather than equity. Interest covered ratio equals operating income divided by interest expense, calculates a company's ability to meet all of its debt obligations, including principal and interest payments. Investment returns, ROI. The capacity of a business to provide earnings to its capital providers is measured by its return on investment, ROI. The numerator of a ROI ratio is a measure of profitability, while the denominator is a measure of capital. Return on equity equals net income divided by equity calculates the profit earned by a company's shareholders on the equity they have invested in it. Net income divided by assets equals return on assets. The asset efficiency of a business is measured by the return provided by its asset base. The price-to-earning ratio, PE, is a measure of how much money a company is worth. PE ratios indicate how much a dollar of a company's earnings is worth to investors. Companies with a higher PE ratio than their rivals are expected to increase their earnings faster. PE is the present share price divided by the diluted earnings per share. The annual dividend yield is the amount of money paid to shareholders each year expressed as a percentage of the current stock price. For example, if a stock share price is $20 and it pays $1 in annual dividends, the dividend yield is currently 5%. When evaluating financial metrics, compare them to previous years and similar companies' financial metrics. Part 3. Beneficial shareholders, directors, and officers. A 10K reports important people section. Knowing how to read a 10K will help you learn more about the management team. The supplementary proxy document is linked from the forum. Part 3's most critical factor is that the organization must be open about how much executives are paid, what benefits they get, and who is involved. It's better to look at CEO and executive compensation packages in this segment. Executives who own company shares have values that are more associated with those of shareholders. Bonuses should encourage executives to think about the company's long-term sustainable growth rather than make costly short-term decisions. Keep practicing. It can be difficult to learn how to read a 10K. Don't worry, we've all been there. The most well-known stock investor in history is Warren Buffett. What method does he use to choose stocks? Every week, read 500 pages like this. That's how, like compound interest, intelligence grows. Warren Buffett. Warren Buffett claims that smart fund managers learn to unwind by putting their feet up and reading as many 10K annual reports as possible. Have we persuaded you to the value of learning how to read a 10K report? You'll start to see the patterns across industries as you learn more about how to read a 10K by doing just that, reading one. Each industry has a collection of distinguishing characteristics that can be compared. Although the system isn't comprehensive, comparing the most important indicators gives insight into the target's market and financial results in relation to the industry. Learning how to read a 10K also allows you to investigate a company's entire history. It gives the investor the ability to understand precisely what they're investing in. True investors are well-informed and aware of their investments' destinations. Don't base your investment choices on what other people say. Take control of both your finances and your life. The annual report is the single most valuable way for prospective investors to learn about a company's financial situation. A company's annual report serves as a marketing tool to entice investors, and a company will strive to show itself in the best light possible when adhering to all Securities and Exchange Commission (SEC) regulations. Takeaways essential. Annual reports, which contain graphs, a letter from the chairman or CEO, and a financial summary, are important marketing resources for investors. These reports are similar to the Securities and Exchange Commission's (SEC) 10K reports. The 10K reports are longer and more black and white. When it comes to reviewing annual reports, start with Item 1, then move on to Items 6 and 7. Any risk factors associated with a firm, such as litigation and customer concentration, should be considered by potential investors. Unfortunately, many investors read annual reports but do not read them thoroughly. To put it another way, while annual reports do not mislead or reflect misleading information about a business, investors should always read them with caution. Learn how to discern the true state of the business by reading between the lines. If you're considering investing in a public corporation, you should always read the 10K filing. The report starts with a detailed overview of the business, then moves on to risk factors, a review of any legal problems, and finally, the numbers. The following are the most important elements on the annual 10K filing. Business, a summary of the company's operations, is the first item on the list. Risk factors, Item 1A. Item 3, legal disputes. Item 6, financial information. Management's discussion and analysis of the financial situation. Item 7, where to begin your search. There is a method for dealing with annual 10K reports that is both reliable and effective. First, read Item 1, which is the company's summary. Item 1 outlines what the company does, who its clients are, and what the company's primary industry is. The financial data is then explained in Items 6 and 7. A prospective investor should evaluate the company's performance over time. In addition, the financial statement should show whether the balance sheet has improved or deteriorated over time. The cash flow statement should indicate whether the company is a cash generator or a cash user. It is possible for a company to have a positive net income while still having a negative cash flow. Look for any discrepancies between the income statement and the cash flow statement. For example, consistent cash flows indicate a stable and prosperous business, while significant variations in cash flows can indicate a business that is in trouble. Large cash reserves may mean that more accounts are being settled than work is being received. Look for risk factors that aren't typical. Any risk factors that are associated with a firm should also be considered by potential investors. One risk factor is the possibility of legal action against the company. Litigation action should be reported in a section called Legal Proceedings in the company information. Companies in the United States are required by law to disclose any litigation, especially if it has a financial impact. Business reports may contain statements like, "Our market is highly fragmented with many competitors," or "Our stock price may experience periods of uncertainty," which are filed with the SEC. Although these are major threats to recognize, they are normal and do not detract significantly from the business's attractiveness. If the business receives a significant portion of its sales from only one or two clients, for example, unusual risk factors that require greater attention. In addition, any major litigation involving the corporation will be revealed in the legal proceedings portion. Legal problems should be evaluated, but they may not be as serious as they seem. A pending litigation seeking $10 million in damages is also an inevitable aspect of doing business for a billion-dollar corporation. For example, Pfizer, one of the world's largest pharmaceutical firms, may be facing a patent litigation and drug liability claims worth hundreds of millions of dollars. But that's standard operating procedure for any big pharmaceutical firm. And it's a drop in the bucket for Pfizer, which has about $19 billion in cash and short-term assets on its balance sheet at the end of December 2018. Concentrate about what you already know. Financial data can be interpreted in a variety of ways. Learn to focus on the most critical aspects of a company's 10K filing by reading the annual report in a way that works for you. Phew, that was a lot. If you got this far, great dedication. Hopefully now you feel much more comfortable reading a 10K. If you found this video helpful, it would mean a lot to us if you could give us a thumbs up and subscribe. Until next time, investors.